Hello, I'm Isaac from Axia Futures and welcome to the second floor of our London trading office. Now today I'm going to take you through a 4-minute video on the engulfing candlestick pattern. Now yesterday was a great trading day for reversals. We had a reversal in equities, bonds, currencies, and so we're going to use that as our example to learn this pattern. So first, let's start with what is the engulfing pattern. The engulfing pattern is quite a simple 2 candlestick reversal pattern. It's where one candlestick basically opens higher than the previous candlestick and then closes lower than the open of the prior candlestick. In doing so, the body of the second candlestick completely engulfs the body of the first, and therefore you have this reversal. Now the pattern that I just described is a bearish engulfing pattern, and when the opposite occurs, where a market opens lower and then closes higher, then you get a bullish engulfing pattern. Now the big question to discuss is, how do we make this useful? So how do you trade it? Now if you're holding for the long term and you see a bullish engulfing pattern, well then you can buy and put your stop below the low. Now if you were doing the other way and you're trying to sell it, then you'd sell the bearish engulfing pattern and put your stop above the high. Now if you're a day trader, this picture changes. Now you've obviously got to anticipate that some sort of extreme or reversal is happening, and to do that you need some sort of reversal pattern, or you need to be watching the price action around a significant level or some other piece of structure. Either way, if you're a day trader, context is key. So just try and understand reversal patterns and things like that, and you'll do just fine trading the engulfing pattern. Now I said yesterday gave some great examples, and the first of those examples is the Dow Jones Industrial Average futures. Now they had been coming off with lower highs for the last 7 days. Then you got this great engulfing pattern, this bullish engulfing pattern, and what was really significant about this one is that the engulfing pattern also broke a really significant support level, failed, and then reversed. So you had great contextual, reasoning there as well to like this pattern. Now, in addition to that, if you can see, the recent highs are quite flat, like it's this kind of like rounded, slowly rounded high. And so that gives you a great target to break. The next example is the euro versus the US dollar. Now, these futures have been coming off really aggressively for the last 2 days. Then the day before, the market made a smaller move downwards. And then yesterday, this was totally engulfed again in a bullish engulfing pattern. Now, the significance of this one is that the engulfing pattern happened where there was these kind of like ledger. You can see there are lots of daily lows in the same area. And so it resolved this weak support, or this vulnerable support area, and then reversed. So this is really good to give you confidence in the reversal. Now the last one I've got for you today is the German 10-year government bond futures. Now this one is a bearish engulfing pattern, and you can see the market opened above the close of the previous day and then closed below the open of the previous day. And in doing so, it reversed. What's really interesting about these 3 examples I've given you, all from the same day, is that currencies reversed, equities reversed, and bonds reversed. So this is telling you something really significant, that the market has just said no to something that the market was trying to do as a whole. Now this contextual information, as well as the obvious reversal trades, is very invaluable. If you've enjoyed this lesson and you'd like to know more about what it's like to be a professional trader, subscribe to this vlog and follow me on my journey as a trader at Axia Futures in London. See you later.